equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down the barriers from beginning to dividend. My name is Bryce, and as always, I am joined by my equity buddy, Ren. How's it going?
I'm very good, Bryce. Very excited for this episode. We've been rolling out the community watch list recently. We've had plenty of people from the Equity Mates community on the show adding stocks to the watch list. Mm-hmm. And today I'm bringing one to the table.
You are. It is about time you brought something to the table.
Big talk from you.
About time you brought something to the table.
I look forward to your addition to the watch list soon.
It's coming. It's going to be my birthday pitch, actually. The big
birthday
dirty 30.
Pitch. Wow.
Yeah. I'm going to pick 30. I'm going to pitch 30 stocks in 30 minutes.
What about 30 stocks for 30 years in 30 minutes?
Sure.
Done. That's all right. That's the episode title.
But anyway, let's just absolutely crack straight into it. We all know what the community watch list is all about. You're going to pitch a stock. Talk us through how you researched it.
Yeah. Now,
and
hold on.
I'm going to try and make it not a monologue.
Yeah. Before we do have a live show coming up. It is just a one-off in Sydney, so apologies to everyone in other states. However, we are accommodating you. So the live show is the 29th of April. You can head over to Facebook or to Eventbrite. You'll be able to see all the details there. Tickets go on sale today at 9 a.m. on the 12th. Tickets go on sale. But for people in other states or who can't get tickets, there is also a live stream that you can sign up to. So head over to our socials and check it out there. It's going to be fun. It's an industry deep dive in an industry-themed location.
It's called Equity Mates and Stake present All Access, yes. And it is an industry deep dive, as Alex said. 4 panel members, one industry, which is the beverages and alcohol industry. For those that are lucky enough to attend on the night, the ticket includes a bar tab, a bunch of food, and access to some investment information that you would otherwise might not be able to get. But as Alex said, it is available online as well, so stream in.
All right, that's enough. Let's add this stock to the community watch list. So there's going to be a bit of narrative here because the more I looked in this, the more it just blew my mind what was going on. So I'll tell you the company up front. The company is Veolia, the multinational giant water and waste company.
What's the ticker?
So the ticker is VIE, and it trades in Paris, in France. Now,
He's making it tough.
What do you mean?
Who can buy something on the French stock exchange?
IG, Comsec, I assume the other banks. IG, same price.
Is it?
Yeah.
Is it guaranteed in IG?
What do you mean?
Do they have the French?
I own a German stock through IG, so I'm going to assume you can own a French stock as well.
Fair.
Yeah.
Anyway, I interrupt. Sorry,
you did interrupt. That was very rude of you. Okay, so there's a bit of backstory here. So how I came across this stock. In August last year, Veolia announced an intention to acquire 29.9% of Suez, which is another giant water and waste company also based in France. And they announced their intention to acquire the whole company. Now, this piqued my interest because, to my mind, Suez and Veolia are the two giants of the waste industry. It would be like Coles and Woolies merging. At least that's how it was in my mind. And, it's not just a duopoly, but they're giant. And they're about the same size as well. And so I thought surely like French competition authorities around the world would have a problem with these two giants, merging. Veolia acquiring Suez. And so I started doing some research on it. And what has happened since August last year is just a giant, global corporate battle that has included, the French Prime Minister getting involved, Suez selling assets just to spite Veolia, Suez putting a poison pill in their business, just all this crazy stuff. So I'm going to talk through it a little bit. But I was looking at the two companies. And I was looking on Simply Wall Street, the stock analysis tool. It had Veolia listed 50% undervalued to its fair value.
Do you believe that?
Well, it's rare that you find a company, especially such a big public liquid company, having a 50% discount to fair value. So the current price is 22.33 euros, and Simply Wall Street had fair value at 45 euros.
Did you look under the hood?
Yeah, I did. I'll get to the numbers towards the end of this episode because I want to tell you this story because it's crazy. But looking at Simply Wall Street definitely piqued my interest. I also looked at Simply Wall Street and looked at Suez and looked at fair value there. Suez trading about 18 euros and it had fair value. Simply Wall Street had fair value at about 21.5 euros, which is interesting because Simply Wall Street and the Suez board of directors agree, but disagree with what Veolia think fair value is. And
Interesting.
That's part of the reason for this corporate battle. They're fighting about 3 or 4 euros a share in share price and acquisition price. So some context on these two companies. Veolia is massive. 179,000 employees, 685 waste facilities globally, 3,300 drinking water production plants, 2,700 wastewater treatment plants, 2,100 industrial sites where they produce energy, either waste to energy, landfills where they capture gas and turn it into energy, or wastewater plants where they create energy. So massive, 179,000 employees. Suez, less clear about the number of facilities. Got a real gripe with Suez's investor relations website, to be honest, but that's a story for another day.
Yes.
But they got about 89,000 employees. So also just a giant of a company. I did some, just to give you the context of the industry, I had a look at Ticker, which is a great source for raw data, and it's
TIKR.
Yeah, it's only in beta. So if people want to follow along at home, you do have we have a way to skip the queue. It's free. So if you go to tikr.com/equitymates, you can jump the queue and actually use it today. So the biggest waste management companies in the world, there are a big 3 in the US. All of these numbers I've converted to Aussie dollars. Waste management, biggest in the world, 73 billion market cap. Republic Services, 42 billion market cap. Waste Connections, 38 billion market cap. They're all listed in the US. Then the next big 2 are Veolia and Suez. Veolia, $20 billion market cap. Suez, $18 billion market cap.
And they're still pretty small relative to the big dogs.
Yeah, and the weird thing is
waste management, 72 billion.
Yeah, waste management. Love the creativity they put into the name. The interesting thing for me as well, and this is a bit of a side note, but Waste Management and Republic Services are US. Like they're not multinational, and yet they're 2x and 3x bigger than these 2 multinational players.
A lot of consumers over
in the US. A lot of consumers over in the US.
Interesting. So if this merger goes ahead between Veolia and Suez, it'd take them to just shy of the second largest company by market cap.
Yeah. I think, and people might correct me if I'm wrong, but I would say it's incredibly rare that a company that is a $20 billion company acquires an $18 billion company. Like, that's rare. The mergers, maybe, but like an acquisition of a company about the same size as you is rare.
Yeah.
For context, Cleanaway, Australia's biggest waste company, is $5 billion market cap. So about a quarter of the size of Veolia. So
it's actually bigger than I thought it would be for Cleanaway.
Really?
Yeah.
There you go. Well, they're
Australia only.
Australia only.
Yeah.
They had a massive stock jump recently as part of this whole fight.
Where does Bingo sit?
Smaller than Cleanaway. Yeah. So
rubbish stock. All right, continue.
All right, now this is...
So what's happened? There's a dogfight.
This is a serious corporate battle. And so jump in because there's a lot of detail here. So August last year, Veolia acquired 29.9% of Suez, or announced they're going to acquire that, say that they're going to try and acquire the whole company. Suez get angry, call the bid unsolicited. The Veolia chairman goes on French TV and says he won't rule out a hostile takeover. Instantly puts them, at odds with each other. French unions get out on the streets and lead Suez workers in demonstrations against Veolia's takeover. And at the same time, Suez really takes the spite up to 11 and starts selling assets just really to screw with Veolia. They sell 1.1 billion euro worth of subsidiaries in Germany, Poland, Netherlands, Luxembourg. Veolia are ropeable.
And to make that clear, they're doing that so that if a takeover does eventuate, the Veolia will be taking over Suez with far less assets on its books than if it had happened without that happening.
Yeah, while at the same time...
Which could be detrimental to Suez if it doesn't happen and then they've just sold off all their assets.
Well, this is interesting because that's not the last... I'm going to call them a spite sale. That's not the last spite sale that happens. And you're right. Like, if this takeover doesn't go
they're going to
through...
be left with nothing.
Well, maybe not nothing, but there's billions and billions of dollars worth of assets and subsidiaries that they're
Are
selling.
Veolia buying any of the assets?
Suez aren't selling to Veolia.
Yeah, but what's to stop them? Yeah, anyway.
Well, I mean, two sides have to agree on a deal.
True.
Yeah. So, now...
It feels like Suez are led by a hothead.
Well, wait until you hear this next bit. So, the Suez board create what has been labelled a poison pill. And basically the background is Veolia were planning, as part of like the competition concerns and making sure this deal wasn't anti-competitive, they were going to sell the Suez French water business to another party. So because Veolia has a big water business, Suez has a big water business, so they were going to sell the Suez one when they acquired the company. So Suez were like, we're going to ruin this for you. We're going to create a poison pill. And they created a Dutch foundation that owns one share in the Suez water business, and then changed like the company constitution that said any sale of this business has to be unanimous. So all shareholders have to agree. So if this Dutch foundation that owns one share, just one share, doesn't agree,
Game
Veolia
over.
can't sell the Suez water business, and Veolia won't want to sell their water business because it's great.
Yeah.
So it's been labelled a poison pill. The Veolia chairman goes on French TV, calls the move pathetic and a betrayal of France.
Wow.
And I was just thinking that, imagine, who's the Woolies chairman at the moment? Gordon Cairns?
Yeah.
Imagine if he goes on TV and calls Coles pathetic and betraying Australia. Like, you just don't have that
It would
heat
be
in
epic.
Australia. It would be epic. Or like if Larry Diamond went, the CEO of Zip went and said the same thing about Afterpay.
Yeah.
You just don't have that level of tension.
Maybe we should try and stir it up a bit.
So we're now in October. Veolia finally acquired at 29.9%. And then Suez sue Veolia in court, and Veolia lose their rights as shareholders of Suez. And at the same time, the Suez CEO tells his staff they're going to fight Veolia, and he wants them to make Suez inaccessible to Veolia and basically increase the share price as much as possible. Don't let this acquisition happen. So tensions are running hot. At this stage, the French Prime Minister is also involved. I mean, these are two huge French companies. November, it heats up again. At Suez's request, court-appointed bailiffs raid Veolia's office, seize computers, search servers, and basically are looking for information of wrongdoing in relation to the sale of the 29.9% of Suez. Suez also put together an alternative bid at exactly the same price that Suez are offering and say they want to take that bid. So no better for shareholders.
Yeah.
18 euros a share is the takeover price, both from Veolia and this private equity firm. But Suez are just like, we don't want to be with Veolia, so we'll take exactly the same price from someone else.
Yeah.
Not sure if that's acting in the best interest of shareholders, but tensions are clearly running hot at this point. No deal, nothing gets done. Activist investors are getting angry. The French government are involved. Get to January, Suez do another round of spite sales, sell off more assets. They sell off water business, or they announce that they're going to sell off water businesses in Spain, Chile, and the US, and they're going to sell waste businesses in Australia and the UK. That Australia thing comes back a little bit later. Veolia reacts strongly, slamming the announcement, obviously ropeable that this business that they want to acquire is getting broken up. the UK government get involved, and the UK government announced an investigation into Veolia's merger plans and Suez's asset sales. At the same time, February, the EU government, the EU regulator, gets involved and rejects a request from Suez to declare Veolia's actions invalid, basically. Veolia says when we're sick of waiting, and they announce a tender offer to buy the remaining shares. Suez calls the move illegal. A court stops Veolia doing it, but Veolia said they've already done it, so they're going to keep doing it, defying the court. French government launches an inquiry into Veolia for doing that. It is just getting so hot. In February, activist investor in Suez calls for Suez's board to be replaced. This has been dragging on for 6 months now, and the board is clearly dug in. At the same time, or a month later, or a couple of weeks later, Veolia personally they announce they're going to sue the board members over this poison pill, and they also sue to prevent further asset sales. The lawyers would be making a mozza right now. And this brings us to today where, a couple of days ago, last week when this podcast is released, did you see Cleanaway's price shot up?
Yeah.
That's because Suez signed a $2.5 billion deal with Cleanaway to sell basically their Australian waste and recycling business. Cleanaway was up 16% on the news, and Veolia blasted Suez and Cleanaway and accused Suez of doing everything possible to make it impossible to reach an agreement with Veolia. So no resolution on this so far. It's still playing out. It'll play out for ages, but there's this poison pill with this Dutch foundation. Suez are just spite selling all their assets around the world, breaking up their business. The board are obviously dug in. Veolia are suing in every jurisdiction they can, and we've got the UK government, the French government, the EU, all involved in investigating what is going on here. This is a multinational corporate dogfight.
And to find out why you have chosen to put one of these companies on the watch list, we will find out after this ad break. So, Ren, we've just heard the pretty incredible story, multinational dogfight that is going on between Veolia and Suez, and how some of the companies here in Australia, Cleanaway, have been, dragged into it to their benefit. But let's take a bit of a look at Veolia itself, perhaps worth going through what it does, and then we can take a look at some of the numbers.
Yeah. So, look, this is me just adding it to the watch list because I think, one, Simply Wall Street said it was 50% undervalued, which definitely piqued my interest. But two, if they do acquire Suez, they're going to be a powerhouse in the global waste and water business. Like some of those big American companies I talked about at the top are just American focused. Veolia, Suez, Remondis, although they're private, are truly international players in the waste industry, and Suez and Veolia in the water industry. So a bit about Veolia. It was founded in 1853 in France, so it's a very old company. Designs and provides water, waste, and energy management solutions worldwide. It offers, so this is talks to its scale, it offers drinking water to 100 million people worldwide, wastewater services to 61 million people worldwide, waste collection services to 40 million people worldwide, and heating and cooling services to 8 million people worldwide.
Wow.
So it's a huge company. Now, I had a look on Ticker and pulled out some of the numbers. So 2020, COVID affected year, it did 26 billion euro in revenue, which is about 40 billion in Aussie dollars. But its revenue hasn't really been growing. 0.82% is the compound annual growth rate for the last 5 years between 2015 and 2020.
It's pretty flat.
So yeah, it's a company that is so big, and the industry is quite heavily regulated, and like the nature of waste pricing is that there's a lot of government intervention, landfill taxes, levies, all that stuff, like incentives to get more renewables, get more recycling, like all that stuff. So you wouldn't really expect a business this big in this industry to grow more than the rate of inflation, which again, the Simply Wall Street 50% was ringing in my ears. If you look pre-COVID, so 2014 to 2019, revenue grew at 2.6% a year on an average growth rate, which again is it's basically inflation. That's the key takeaway from the revenue numbers. That's what you're getting from a top line revenue growth. Profit is interesting though. So 2020 was tough. 2020 was COVID interrupted. It did 88 million euro in profit, which is about 163 million Aussie dollars. Off 40 billion Aussie dollars in revenue.
Jeez.
Very thin profit margins. Yeah. But 2020 obviously can be a bit of noise and not signal just because of the year that it was. If you look at 2019, it did about 620 million euro in profit. Between 2014 and 2019, so excluding the COVID year, it's grown its profit at 21% compound annual growth rate. And so I think that's where the Simply Wall Street number starts to make sense, and that's where this business starts to become interesting. It's a business that isn't going to grow its revenue massively. If it acquires Suez, its revenue will jump up, but because it's acquired all of Suez's revenue, but you're not really expecting the phenomenal growth rates we're seeing in a lot of the tech companies and stuff that we find really compelling. This is a capital management, cash management, story. It's a story of how do you make this business as efficient as possible to deliver as much profit for shareholders. Now, one thing that Simply Wall Street has that I really find quite useful when I was looking at this company and just more generally is they aggregate as many analyst predictions as possible. Mm-hmm. So they, for future years, it can sometimes be really hard to project yourself what the business is going to do in the future. And so Simply Wall Street try and get as much data as possible and give you that information. So to give you an idea of their projections, so from 2021 to 2024, they expect revenue to grow to 29 billion euro from 26 billion euro today. So it's a compound annual growth rate between 2019 and 2024. The projection is 1.4%. So again,
inflation
we're talking inflation. Again, that just builds on that narrative. But the profit, the analysts, like Wall Street analysts, European analysts, expect profit. So 2019 was 620 million euros. 2024, the consensus expectations is 1.1 billion. So they expect it to just shy of double profit in that time, which is about 12.3% compound annual growth rate. So again, that story of this isn't a business that is going to grow incredibly quickly, but it may be able to grow its profit by managing the business incredibly efficiently.
Yeah. Bit lesser than the 20% CAGR that it did from 14 to 19.
True.
What's going on there?
Well, I don't know. It gets tougher. Like
it does.
As you pick the low hanging fruit, you have to reach higher and do more to get more efficient. But I mean, this business has been around for so long. So that's why I just want to add it to the watch list. I don't want to add it to the portfolio.
Sure.
I want to add it to the watch list partly because, if it can grow its profit, it meaningfully gets more valuable. Yeah. But also I'm watching it because of this corporate dogfight.
Yeah.
So I think just some concluding thoughts on what to potentially like, and then what the risks are not from a numbers perspective, but from a qualitative perspective.
Yeah.
So what to like about these waste and water companies? A lot of them are local monopolies. Like if you own a landfill, it's very difficult for someone to open a second landfill near you. Like, all these waste companies work together to, put volume into whatever landfills nearby. If you're in a place like Sydney, there's obviously going to be a couple, but they build pretty strong local monopolies. And a key part of that is because if you're not the most transport efficient one, like if you have to go further out, that adds cost to everyone else. And so if you can be in a good location, if you can offer good pricing, it's difficult for people to come and disrupt you. So that's number one. And same with regulated water utilities and wastewater treatment plants and stuff. It's very rare that someone opens a second wastewater treatment plant and tries to compete with you.
Yeah.
Like if you've got the contract with Sydney Water, you've got the contract with Sydney Water. So that's one. Two, industry tailwinds. So there's a lot of investment being made in renewable energy and reducing waste to landfill, and these companies are critical players in that. Like, no one else is going to build waste to energy infrastructure. No one else is really going to build like more recycling plants. And even if someone else builds them, like Macquarie is investing in a waste to energy plant in WA, but they're not going to operate it. Like Veolia, Ramondes, Suez, Cleanaway, like Bingo, maybe. Like if someone's going to build these facilities in Australia, these are the companies that are going to operate them. And that's the same around the world. And so there's a lot of money flowing into that space, a lot of outside capital flowing into that space. And these guys are going to be critical players in that journey. An interesting dynamic that's playing out is that landfills have incredibly strong margins. Recycling facilities, not so much. And so these waste companies want to get volume in landfill from a financial perspective.
Not great.
But the industry is pushing them, and governments are pushing them, and consumers are pushing them, and local councils who have incredible bargaining power are pushing them to put more into recycling, which is then like hurts their margins. Yeah. So that's an interesting dynamic. And in some ways, future regulation may entrench the biggest players because they're best able to adapt to it. There's things happening in Australia at the moment where waste trucks are going to have like accurate weights on the back and stuff like that, and like weight-based billing and stuff, and that's happened overseas as well. And it's like the companies are going to be able to invest that capital to retrofit all their trucks aren't going to be the local operators with a few trucks. It's these big companies that often regulation helps entrench the biggest players in a market. So I think that's things to like. Some things not to like. Number one is this is not a fast-growing industry.
No.
And that's the nature of the industry, and that's the nature of these massive companies. Number two, this Suez battle is going to drag out, and who knows how long. Who knows how distracted they'll be. Who knows what the outcome of it will be, and what that will mean. So there's a big risk there. And then a question that I don't have an answer to, but I don't think you'll have an answer to because I haven't given you any notice on it. But for me, it's like you look at a company like Waste Management or Republic Services that's in the States but is 2 or 3 times the size of Veolia. Why aren't they putting a competing bid in for Suez?
Because they're run by a bunch of hotheads.
What do you mean? I think anyone that's running a $72 billion company...
No, as in Suez.
Yeah, I guess.
Stay clear of that. Look at what's going on.
But it's like this. I just don't understand. Like, they're so big. Why don't they try and expand internationally?
$70 billion company.
Not bad. 700 billion's better.
Yeah, true. I don't think... Yeah. Who knows? Maybe we give them a call and see if we can get the CEO on.
True, that would be big. We'll ask him, would he ever consider a name change? Waste Management is a bit boring.
No, but it's a very good name for SEO results on Google.
True. Yes, that is actually something that all companies should adopt. Woolworths should change their name to Food and Drink Store. So that's that one. I really just wanted to talk about the dogfight that's happening. Yeah,
nice, Ren. Well, we'll certainly add it to the community watch list. Do we have the watch list up and running, or
no?
We can put that. We'll make sure we get that up and running.
We
are getting a new website in May. We are getting a new website in May. I want to make this very clear to you guys out there. We know it's not up to scratch, and we've been working a day and night over the last few months to get something that is much better quality and more aligned with what we want to be delivering for the Equity Mates community. Yeah. So we know the portfolio sucks online. We know the community stock watch list sucks online, and we will be getting it up very soon. So hang with us. It's just around the corner, and you guys are going to love it. And when I say we have been working day and night, our dev team has been working day and night.
We have been signing things off day and night.
Yes. Now, a reminder as well that if you did enjoy Ren's pitch there, and thank you, Ren, that was incredibly interesting. Some of the numbers that you've been pulling were from Ticker. As you said, there is a wait list to get on there. However, If you would like free access and to check it out, it's in beta, head to ticker.com/equitymates. That is TIKR.com/equitymates. You'll be able to jump the queue, get straight in, and it is a phenomenal resource for finding information on almost all the companies around the world that are
global.
listed. Global. Likewise, if you would like a sort of distilled, way to view companies and think about valuation, then Simply Wall Street is another resource that Ren clearly used in this pitch. So we'll add it. We'll leave it there.
Yeah.
That was great. Tough act to follow.
Oh, well, you're doing, 30 stocks for 30 years in 30 minutes?
Easy.
That's going to make great social content as well. We're all about the social content.
Looking forward to that.
Is it going to be a thing where every minute I ring a bell and you have to move on to the next one?
Sure.
Jeez, I'm going to have a lot of fun with that.
That will be coming towards the middle of May, I think, is when we've scheduled that one.
Okay.
Looking forward to that.
And then what we can do is in the Facebook group, put all 30 stocks and ask people which one they like the best from your pitch.
Sure. So that is the community watch list. Next week, Ren, we are going to be doing an industry deep dive on hydrogen. So for everyone out there that is interested in that space or has no idea what's going on, that's what we'll be doing next Monday. And again, remember, check out our social channels. We do have a live event coming up here in Sydney, but you're able to stream in from wherever you are around the world. So, yeah.
Let's leave it there.
What a wrap.
Nice one.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.